And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to a very cold, rainy forecast this morning. It's Friday, December the 9th. My name is John Hoagland. Thanks for trusting me with your time. As always, our focus is context, risk management, and patience. Well, we've got the markets on the move this morning, don't we? The PPI numbers came out, and in majority, they are inflationary. All four of the five numbers, four of the six numbers I'm looking at were all greater than expected, which indicates continuing inflation, which implicates higher rates for longer. The one bright spot was the food energy, the PPI without food, energy, and transport year over year, finally back down below 5%. We can see that the markets are a little perturbed by this. We've got our equities diving to the downside. It's going to take a little bit of work for us to recover that and see if we can't close the week on a positive note. We do have some more information coming in consumer sentiment, the Michigan consumer sentiment, and wholesale inventories at 9 o'clock. So this morning, sitting down, it looked like we were kind of pushing up to the upside. Looked like we may be able to recover some of this week's losses today. That's now changed a little bit. We did snap a 5-day losing streak yesterday, which is, of course, good, but things are shaping up a little bit differently for us today. Stock index futures are in rollover. They're going to roll into the March contract next Tuesday into next Wednesday. Investors will begin focusing after today on next week's economic data. We have the CPI number on Tuesday. Remember what happened last CPI. And then we've got the FOMC announcement on Wednesday. So after the rest of the economic information today, a lot of the focus is going to be on rollover, positioning for next Tuesday and Wednesday, and hedging for next Tuesday and Wednesday for the longer time frame traders who are currently working on trying to get a cheap rollover accomplished so that they can continue their positions in the March contract. So there's a lot on the minds of the longer time frame traders. There is a tendency for them to try and keep the market kind of range bound because it makes it easier for them to get a cheap rollover. We mention this quite often during rollover, but if they do get provoked, if you poke the bear with the stick, the bear is going to wake up and eat you. So we've got to just keep an eye on the information where we are as far as the area of range that we're in. We're kind of falling into range in the equities, and there is that tendency during rollovers. This morning, the VIX jumped up about 1.5% after the numbers came out, 22.52. We got a jump up in the dollar index as well. It's up around 105 last I checked. And we also got a little spike in the yield on the 10-year, 3.5%. About the only market that didn't seem to be affected by this was crude oil. We'll have to see what happens there. As always, I ask, if you like what you see, hit the lucky like button, share, comment, question, feedback. Heckling are always welcome. Love is always welcome as well. Subscribe to our YouTube channel so you get notified when we do go live. It is Friday. This is the last live session from Top Step for the week. I want to thank everybody for joining me for Make Hoag Money this week. We had a good, positive week in Make Hoag Money. That's always a good thing. Don't forget, next Tuesday's Make Hoag Money will be at 9:30 Central Time instead of 8:20, and we're going to have special guest Anne-Marie Band on and to looking for opportunities during that period of time with me and answering questions from all of you. So we're really looking forward to that event. I'm hoping you're all going to be there and all going to benefit from the vast knowledge of Anne-Marie Band. So we've got some time here. Terry King, good morning. First in the room, you win the prize. Theo, good morning. Serenity Trader, Jules Caprice, Shaw Cunningham, good morning. Rick Brody, Spencer, good morning. Happy Friday to you as well. Bill Phillips, Joel MB, Charles March. Joel, I'd never thought about Jaws that way, and I think it's one of the reasons I like you so much. You're a weird guy. Rusty Golfer, my spirit animal, it's good to see you. George Duquet, Caesar, good morning. Bear goes long. Lacey, good morning. Everybody says good morning, Lacey. Good morning, my guy Vince, Ricardo, Rob T, Charles March. Weekly kickoff low on ES, extremely supportive yesterday. Took several good trades. Shows up better on a 5-minute chart. Good, Charles. It's the reason we put those out. We want them to help. And, there's no guarantees that they're going to be providing good opportunities. They just are levels where we look for longer time frame traders to adjust inventory. Knowing that it's rollover, it's less likely that they're going to be adjusting inventory and continuing to get their cheap rollover done. Naveen, good to see you. JD, love the hat. Good. Scott Sauce, and he conquered. Sarah Hall, good morning. Prayers and love to you as well. Good morning. It's snowing up by you, huh, Rick? Rick's just the other side of the Cheddar Curtain from Illinois. He's up in Wisconsin. Caesar, yes, Merry Christmas. George Duquet, I love you too. I love you all. You know that. Three Lions Insight, good to see you. Hegel Matters, already with the Santa hat, right? Well, it is the 9th. We are, kind of in the Advent calendar period of the year. So, Spencer was short right before PPI because we're up against downward trend line 2.3 off one contract. 2.3K. Wow, that's a big trade, Spencer. And I got to tell you, I admire your intestinal fortitude for holding a position into that. I don't do that anymore. I've had wonderful days and horrible days, and adding them all up, I'm about even on them. So I've decided to avoid taking positions into those. Keith, good morning. Bill Phillips, Dimitar, DA. Jimmy Decker, thank you. Love the hat. David, Anissa, good morning. Ho, ho, ho. Weekly kickoff low, spot on. Excellent. Vince, is Santa delivering money bags today? Boy, I wish he would, right? Wouldn't that be nice if we could just ask Santa for a nice big sack of hundreds for Christmas? Make it 100 pounds this year. 50 pounds last year. Make it 100 pounds this year. Yes, Spencer is a brave man, right, Caesar? That's what I said. That's intestinal fortitude. Intestinal fortitude. All right, so what else do we have here? Now, other than the special Make Hogue Money Tuesday with Anne-Marie Band, everything should go as usual next week. It is just another week in trading. Then the following week is the 19th through the 23rd. After the 22nd, Thursday the 22nd, I'll be taking the 23rd off in the week between Christmas and New Year's. So we won't be having, I don't think, any of the usual broadcasts, if you will, from Top Step the week between Christmas and New Year's. And we were looking forward to making hopefully some really positive changes over the first quarter and second quarter of next year for all of these opportunities for us to spend some time together. Looking forward to a little bit of time off. It's always nice. I'm hoping that you're all going to take a little bit of time off and spend some time with loved ones, friends, family, and and have a blessed holiday. I know we've got Hanukkah coming up here in the beginning, I believe, on the 18th. We've got Christmas, we got the holiday season. So happiness and blessings to you all, and we will see if we can find some happiness and blessings in these charts right now. Let's open this up with the daily in the S&Ps. All right. Well, we are in the teeth of rollover, right? Adding 29,000 contracts in open interest yesterday. 110,000 of them were in the March contract. You can see that the December positions are moving into the March contract already. It makes volume and it makes open interest usage for monitoring the auction process very difficult during rollover. Now, looking at the New York Stock Exchange volume yesterday, it was off about 2.2% from the previous day. So yesterday we did lose a little bit of interest on the New York Stock Exchange. I don't think that that's all that impactful. Now we've got basically an overlapping to higher price bar here, even with the CPI numbers that came out from yesterday to today. Did I mention it's rollover? I try and make sure everybody's aware of that. Now, if you take a look at this, does it seem as though this market is setting up a head and shoulders reversal pattern? It very well might be. I'm going to be looking at the bottom of the neckline, probably right around here, a little below last week's low. But we got to spend a little time up here to create that right shoulder, I think, a little bit before we may see anything like that happen. It's speculation that it's going to kind of turn into a head and shoulders situation. But I digress. Here's the 30-minute chart. Well, right basically at weekly kickoff. Had some decent opportunities at weekly kickoff low yesterday. Some pretty decent trades against that area, that level. These levels are never finite. They are zones. So, yeah, I can see how we could have had a pretty good day yesterday, especially here when price moved right to weekly kickoff low, right to quick kickoff low. Some really good pullbacks off of that. Looked below it, couldn't accept. Continuing moving higher through the overnight session, creating overnight longs, which are now, of course, going to be reconciled. We're back in range. We're back in value. Interesting. So this big, scary move to the downside seems to be losing some of its power. I would think. We were looking at the fact that the downside auction had been slowing. We did break the 5-day losing streak yesterday. I'm hoping that we're going to continue that trend today. If we do move higher, we've got this trend line up here that may be interesting for an execution. We've got last week's low, which could be interesting also for an execution because it lines up relatively nicely with the low from yesterday. And weekly kickoff is still in play. The more often it is revisited, though, the less likely it is going to hold in either direction, but it still offers the opportunity to limit risk. Anthony, I would stick with the December contract for now because let me take a quick look. December has 252,000 contracts traded. March, 151,000 contracts. So the volume still overall in the December contract, probably on Tuesday, the March contract will usurp the December contract as far as volume is concerned. And we'll be watching and we'll let you know when we're going to be changing. But today the volume still looks like it's going to be greater in the December contract. You're not making a mistake by moving to March. It's not going to tag you as not trading the front month. But just for liquidity purposes, I always want to trade the highest volume contract. So Here's the TPO chart from yesterday, per your request. P-shaped, short covering. Again, very difficult to read open interest during rollover. And excess at the low here. We had our big spike to the downside. We are back above the excess low here that we had yesterday. Low excess, high excess, low. We open above that. I'm going to be probably still continuing to look for longs until proven wrong. Yes, I'm saying that. We're back in value, so that tells me that I may be able to relax a little bit and wait for better trade locations as the day goes on. Take a look at crude oil now. So we've been 1, 2, 3, 4, 5 straight days lower. The momentum to the downside may be appearing to slow a little bit here, although our measured move takes us all the way down below $65. We have the White House has stated recently that they're going to start thinking about refilling the strategic petroleum reserve when crude gets down to around $70. So it may look like we're starting to get a little bit cheap here. We added 900 in open interest yesterday, which is a considerable slowing of an increase in open interest on the downside auction. We did have higher volume, however, so some conflicting information for us there. It's Friday. We started the week 1, 2, 3, 4, 5. We started the week up here about $80. We've moved about $8 to $9 lower. If there are some speculators that are holding shorts, there is the possibility that they could start to cover some of those shorts just to take some profits today. Yesterday, we had a B-shaped profile. B, lowercase b. The market still continuing to squeeze longs out of the market. But when it does, it takes selling power away from the marketplace. Look where we've opened. Central, right in the middle of range, right in the middle of values. Try and stay patient today. Try and stay patient because typically when this does happen, there's a higher probability of the best trade location happening at some point later in the day. Maybe it's in a half an hour. Maybe it's 2 hours from now where the best trade location presents itself to us. We don't know. But using probabilities, we can say there's very little change in the perception of value of a barrel of crude oil right now. So be patient. Look for the market to offer opportunities away from value, away from where everybody else wants to trade. Those are the best trades if you ask me. I don't want to trade where everybody's trading. I want to trade where people don't have the opportunity for very long to get into the position. All right, here's the Nasdaq. Yeah, Joe, I'm impressed with that rebound from the PPI as well. Looking for longs on pullback to test overnight lows. I'm with you there, Joe. The Nasdaq, lower extreme of balance, holds for a couple of days. We looked below last week's low, but we never were able to accept. We closed yesterday right at the weekly kickoff low. 11,645 was weekly kickoff. We closed at 11,645.50. We've had taken a look lower, but we're still overlapping higher range even after that number came out. All right, so here's the 30-minute chart. Here's our settlement, P-shaped profile. Well, that would be different, right? Do we have a P-shaped profile in the S&Ps? We did. So that's very similar. Overnight inventory was a little bit long. Now we are back in range and back in value, trying to stay patient. Remember, it's in rollover. Markets are going to go too far sometimes, and they're not going to go far enough sometimes. The bigger players are focusing on getting a cheap rollover. So the short time frame traders may get a little too rambunctious, or they won't be able to push price to specific levels. Big dive, nice pullback. It's going to be an interesting trading day, I think. And remember, anything can happen and usually will. Oh, we didn't look at the TPO chart here for the Nasdaq. My bad. P shape, high excess low, lower excess high. Couldn't get to yesterday's low. Now it's maybe the overnight low is an opportunity for us. But here we are back in range and back in value from yesterday. Patience, yeah. And we do still have some information due out. Michigan consumer sentiment and wholesale inventories. Who knows how impactful they're going to be, but they can be. Gold, in balance and short time frame controlled. Potential triangle pattern breakout here this morning. Volume is pretty low yesterday, right in the middle of the range that we're currently in. We added 1,300 in open interest yesterday on an overlapping to higher range. Here's what it looked like yesterday. We had a push to the upside and then range bound for the rest of the day. Overnight inventory was long, reconciled. Is it getting long again? We did open with a gap. The gap was closed when the CPI numbers, the PPI, numbers came out and took us right back down to settlement. And here we go. The TPO chart here. Let's see if there's anything impactful on this. All right. Oh, sorry about that. So, yeah, yesterday we did have a weak high in profile right here, low excess high here, indicating the upside auction is unlikely to be finished. Well, we can see that we opened higher, and with the PPI, we went right back down to where? Point of control. Yep, point of control from yesterday. Volume point of control here, TPO point of control here. Went right to it and then came back up. Visuals. Markets are extremely visual. So here's the euro. The euro added 1,700 in open interest. That's a slowing of an increase in open interest at the high here. Volume and open interest, again, is going to be blurry because not only are the equities in rollover, but so are the currencies. So upside structure is intact. Last week's high, I'm considering somewhat pivotal. It's where price is right now, relatively centrally located in the extended trading hour range. Here's the 30-minute chart. Here's our dive to the downside. We have to assume that the dollar has fallen off its highs that it put in after that number came out, and it has. It's down well below 105 again right now. Boom. We set up a head and shoulders here. Did we already resolve that because of that push to the downside? Only time will tell. Here's the 10-year. Past rollover, but really range bound, I think, expecting to see traders hedging and positioning for the FOMC on Wednesday. Again, inside extended trading hour range before the numbers came out today. We're pretty central in the area of balance that we're in right now. Here's the 30, kind of short time frame controlled here. still inside the range from Wednesday's move to the upside. Knee jerk to the downside, outside of range and value right now. Might be offering a larger opportunity here, but I think is by and large, the high here and the low here are the extremes where I'll be focusing on until after FOMC, until something changes. I'm looking at these as your extremes. Then the natural gas, did we just get to? Yes, we did close the gap. So we had no real opportunity until right now to close last weekend's gap. We were stuck down here in the islands. Yesterday, on the push to the upside, we lost 5,900, indicating short covering, but we're seeing some continuation to the upside now. I'm not sure if this is related to PPI at all, but here's the 30. Whoops. There was some indication that the upside auction was probably not over in the profile yesterday, and you can see it right here. It's a week high. We had excess at the low and no excess at the high, indicating the upside auction is probably not over, and that has just proven to be true. We're moving back to weekly kickoff low, actually, which could be somewhat resistant. It's the gap close. Pretty good push to the upside here, huh? Do we have some overnight longs here that are getting paid? It does seem that that is the case. And on the TPO chart here, here's our excess low. Here's our no excess high here, indicating an unfinished upside auction. Almost got the regular trading hour gap closed here. Almost. Let's see if we can get her done. So, Haggle Matters. A period might be considered a weak low as it traded right down to the 100-day simple moving average. Right there. Let's take a look at this on the continuation chart. It may be in a little different spot there. Yeah, it's been kind of hovering around there for a while, right? Now, let's see here. $40.33, is that where it comes in? Yes, 40.33 TPO. That's not correct. There's something wrong here. $39.40.33. $39.40.33. There it is. So you're looking at the one without the overnight. There it is. So that's regular trading hours. All right. Thanks for pointing that out, Haggle Matters. I know you've been spending a little time with the master, which is always great. All right. Okay, we've got the day in front of us. Let's make sure and limit risk. Yeah, it's snowing in Wisconsin, isn't it? I just got a picture from my brother. He's got maybe half an inch on the ground up there. We'll see. So, manage risk today. Capital preservation Friday. It is rollover. There's absolutely nothing wrong with limiting your activity during rollover. In the trading pit, there were a whole bunch of people that were directional scalpers, directional traders that took rollover off for 2 weeks. They would take off for rollover because it just acts a little bit differently. So keep that in mind. Okay? Beep. Do you have any insights on how options affect intraday equities prices? You're in luck. Next week, on Tuesday at 9:30 p.m., a.m. Central, we're going to have an expert on this. One of our experts is here today. Joe D. is talking about how options affect intraday equities prices. And we're going to have Anne-Marie Band on Tuesday, and another subject expert on that for an hour. So this would be a wonderful time for you to join Make Hogue Money on Tuesday at 9:30 and ask that very question. Yes, Ray, you are not going to get a lump of coal. You are going to get the hind quarter of a wildebeest this year. Wah. All right, take your deep breath. Stay humble, stay grateful, stay creative, stay centered in your trading today. You start to get upset and emotional. You're not centered. You're not going to make anything beautiful out of that lump of clay. So have a great trading day. Have a wonderful weekend. Stay rested. And be kind to yourself. We work hard at this. You deserve to do something nice for yourself. Don't forget about others too. Say a prayer for peace. Have a wonderful weekend. Blessings to you all. I'll see you on Monday morning, 7:45. Ho, ho, ho.